Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap, where we take a look at these markets each day, asking ourselves one question: what happened today? What might it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you subscribe, anytime content is pushed, you'll be notified. Also do a weekly show, do morning short takes, a lot of material out there to benefit traders and investors alike. So last night we looked at these markets. We had another push up, and then today a little bit more of a push up. It tried to trade down, was trading down actually takeaway bars at the beginning of the day, but by the end of the day they were up, and they were all the way back up into green. S&P's flat, Dow slightly down. A little bit of a shift tonight, going into the composite, going into the NDX, coming out of those beat-up sectors, where they were concentrating on the last 2 days, and moving over into some of the tech names. If we look elsewhere, gold, silver down again, nat gas, oil, commodities in general getting hit again as the dollar got stronger. We had the GDP number this morning. GDP number showed this strength. They had a bunch of revisions for past years as they moved to a different model. And that caused some ripples, but in the end they bought it, and they bought it back up. And if we look at the markets, the strongest run right now is the S&P 500, and again that's where all the beat up sectors were. Big push up, they traded down to yesterday's lows, then they turn around and run it right back up to the highs. So S&P finishes flat. Really nothing here on this chart other than the fact it's at resistance, that same line we drew last night. It's sitting at that resistance zone, and let's draw that in. So we're talking about this bar, and that's kind of the where the rubber meets the road. Either you get over it or you come back down. Now, if you look at some of the others, and we'll just go to the Nasdaq. These look more like the classical bear flags, they call them. Where you have some sort of a push down, and then you get this little flag going back up the other way. And typically what that does is work its way back down again. That's typical. Of course, this market's anything but typical, and we haven't seen typical trading action in a long time. Instead, what we've seen is little pullbacks, and let's just look at a couple of cases here. Here's a good example. Here's a little bear flag here, right? Then you get the breakdown, and then what do? They jam it straight back up. And you can go to any of these other ones. I'm looking for it. Here's another example. Here's a bear flag, right? And then you get the breakdown, and then in this case it doesn't even make the new low, and they jam it up. That's been the case so many times where you have some sort of a push down, you get a bear flag type formation, and it goes right back the other way. And it's been that way for years. So many times I've seen this that I can't even count them. It just seems like the normal patterns that people used to be able to short, they can't short anymore. And it's almost as if the programs target those traders that are trying to do those patterns still. Classically, if you look at this, it's not telling me anything really. I mean, we're coming into the top of if we take that same big bar volume that we had over on the S&P, we came into the top of it and just slightly got over it tonight. So this is kind of, again, an area where you would think from here to here should be resistance. This is where this thing should try to fail. Given the recovery today, where you open, go down, and you come straight back, this market certainly looks like, just from all intents and purposes, as if it's going to try to rally again tomorrow. Tomorrow you got the unemployment number. The only one that really looks weak is the Russell down here, and that Russell. Let's see, we broke here, so really the only swing point low is this one that's in effect, right? That's the retest regen zone. The Russell could easily get back into this area if the rest of the market keeps trying to pull it higher, which is what it's doing right now. So even though the Russell's not showing you anything, typically what happens in a strong market is those things that lag get rotated to. So we saw, the beat up sectors getting rotated to for the first 2 days of this rally. Today we saw it, push out and go back into some other things. For example, if I pull up the sectors, you can see let me grab the sectors here, And I want to bring up the IBB, for example. So here's the IBB. So this has been a hot sector, right? You get the push down, you have volume. Today, you start selling it off, you get underneath the lows, and the next thing you know, they flip it back around, and it looks like they're going to push it back up into this high. So the money rotates back into the perennial winners, so to speak, and starts pushing those higher again. And there's a number of these. If I go down the sectors, here's this consumer discretionary, right? Same sort of thing. This has been, if I pull over weekly charts on these have been on a tear, and they continue to be. If I go to the healthcare sector, right? Healthcare, they start rotating back into the last couple of days, especially today. They bought in on that dip. What was it? Oh, financials were that way. Financials have had a strong run, and financials rotation back into today. So domestically, I don't see anything here to tell us that we're going to get any kind of downturn tomorrow. It looks like we're going to try to close the week out flat or higher tomorrow. If I go overseas, though, the real story continues to be all the press around Shanghai, and I've given my thoughts about what's happening here, and that is that with the intervention that's taking place, it's getting harder and harder to read these signals and have any faith in them because you don't have an unfettered market. But here you got the same sort of thing, a bear flag. If you do the neoclassical, right, you're looking at the volume on this low and you're saying, hey, if you get underneath that, that's an issue. And so that's the trade again tonight. Do you break it down, or can you just rise this thing back up to this breakdown bar and get over it? That's the read. I don't know if this market's going to tell us anything. And so what I've been trying to do is, instead of looking at Shanghai, I've been trying to look at Hong Kong. And if I look at Hong Kong, this big volume bar is the key one, and that top is 24,411. You got into it here, you got back out of it the next day. Now you're coming back into it a second time, close at 24,497. So tonight, if you close inside this bar, right, then the pressure is going to be on Monday to get it back out again, because if you don't, usually the bottom of the bar is where these things try to head. So, the test is here. If you can't stay over that, then you're going to try to go after the lows again, and that's the one I'd be watching overseas. Europe, we saw France push higher today and get over its little breakdown bar. So the breakdown bar was here at 50.33. Volume expands. This thing looks like it wants to push towards the top. And if I look at the DAX gets over the breakdown bar, closes under it, but actually has more volume. And so that looks to me like that one is also going to try to push higher again tomorrow as well. And finally, if we shift our attention to the dollar, here on the dollar, we had the push up today. They started to sell it as it gets towards the high. Now, this is the natural place that sellers should come in, right, as you come into resistance zones. And so you got these highs up here, these swing point highs on the daily chart. And this is where you should see sellers try to step in and do something. Now, if you pull it back and you look at it on the weekly, this is a key area, because if it gets over, it's going to try to go back to the highs. And we know from experience that the U.S. corporations have struggled with a strong dollar. And so the key here is this swing point high. Do you get over it? Do you get over this resistance zone or not? If you do, then you've got the ABCD structure that will take you back to challenge these highs. So dollar at a critical point here. If it gets much higher, gets over the swing point high, especially on a weekly basis, and this price point, 25.67, you close at 25.51, you're not that far away. If we get an unemployment number that's strong tomorrow, right, that's going to put juice into the dollar again. And if it gets over that and stays over it, dollar is going to try its best to make a run for those highs again. And that should, again, theoretically, put some pressure on U.S. equities. Of course, help European equities, which will have a cheaper euro, help the Japanese yen equities, the yen going cheaper, that makes equities there cheaper. Even would help probably China initially. Where it's going to hurt if this dollar continues to go higher is anybody that has dollar-denominated debt. And right now, that's emerging markets, and so it looks like emerging markets may take a hit from it as well. Well, that's it for tonight. I don't have a lot of signals here. It just looks like we're going to try to grind higher again despite the old classical bear flag reversals. They haven't worked for a long time. I don't know that they're going to work tomorrow. Have yourself a great day, a good weekend, and I'll see you on Sunday. Good night.